Today we're going to cover Chapter 12, titled Clearly Defined Exit Strategy. We talked about bridging the fear gap. We also talked about asset accumulation, which is stage 1 of retirement planning, and income distribution planning, which is stage 2. Very important to understand those two stages. Well, it's also important to understand that most financial advisors and brokers specialize in stage 1. They specialize in asset accumulation planning, and a lot of that has to do with their business model. They get paid based on the amount of assets you have in your account every year, and they get paid year after year after year, so it's their goal to keep all your money in the account. It's impossible for them to design a retirement income distribution plan and do the best for themselves, because every time you take out money, the account value will be going down and they'll make less money. So it's very important to understand that concept. We want you to focus on stage 2, which is retirement income distribution planning. It means you could have less money in your account as time goes on, but if we can set up a plan that guarantees your income will never go down for as long as you live, and if you're married, for as long as your spouse lives, even if you live to 120, and your assets are never subjected to market volatility or investment risk again, and you can also pay some of the lowest fees possible, wouldn't that put you in a better position? We'll make sure you don't have to worry about your assets going down in value, and you also don't have to worry about your income decreasing or stopping at any time. And we also feel the goal in developing a successful retirement income plan is, number 1, creating what we call developing a clearly defined exit strategy for your assets. There's a rule, there's an old axiom in investing, and that is never invest your money unless you have a clearly defined exit strategy on how you're going to get your money back out of that asset. Think about that. Never put your money into an asset unless you know how you're going to get it out. Is that a key planning technique? We think it is. Now, how many people put their money in the stock market with a clearly defined exit strategy on how they're going to get their money out? They don't. They put their money in, they hope for the best, they go through the volatility, the ups, the downs, they have gains, they have losses, everything's going on, but they have no idea how they're going to take their money out. Does that make any sense at all to you if you're a retiree or soon to be a retiree? It can't. It can't make any sense at all, and yet that's what your broker and your financial advisor keeps telling you, and then you think that's the right methodology, and it's not. You have to create a clearly defined exit strategy. If you don't, then as you read through the chapter, you'll see an image of money locked up in chains and a lock. And we call this assets that are locked up with no clearly defined exit strategy. And it makes it extremely difficult, almost impossible, to create a consistent cash flow for you during retirement. So do you really want your assets locked up? Without an exit strategy, you feel uncomfortable. You feel fearful using your assets for income, so that means your assets are locked up. So what you have to do is create an exit strategy. Well, what the heck is an exit strategy for your retirement assets? It really comes down to then using those assets to create two things. One, as much guaranteed income for you and your spouse if you're married for your lifetime. So even if you live to 120, your assets will never run out. And 2, make sure you have everything down in writing. Make sure in writing it shows how much income you're going to get, when you're going to get it, how long it's going to last, what your fees are, and you know year by year by year what your income is going to be. Wouldn't that make you feel comfortable, especially if the income that's listed is guaranteed? So we want to make sure you have an exit strategy for those retirement assets. So then we show inside this chapter, there's another image of a safe that's open with all the money spilling out. We call this assets unlocked with a clearly defined exit strategy. And that's the only way you can create consistent and significant guaranteed retirement income flow. You have to use guaranteed lifetime income plans that make sure no matter what happens with the market, with volatility, income is going to continue to be paid to you month after month, and your spouse, if you're married, for as long as you both live. What you want to do is make sure you put your plan in writing, you focus on guaranteed lifetime income, you definitely maintain a suitable amount of liquid assets in the bank or other non-volatile liquid assets. You control and understand the taxation to you and your beneficiaries. You create maximum income strategies, not maximum growth strategies. The goal isn't to accumulate as many assets as possible. The goal is to create the maximum amount of income you possibly can, guaranteed for as long as you live. You want to work with a financial professional who not only understands this exit strategy concept, but also practices this for the benefit of their retired or soon-to-be retired clients. And you also want to look at creating a plan that transfers your assets to your beneficiaries on the most tax-efficient, even tax-free basis. If you follow these steps, you can create and design a clearly defined exit strategy for your retirement assets.